And welcome to the Real Estate Show on KCMX News Media 880. Pete Belcaster and Joe Brett, the real estate guys, with you here today. And thanks for joining us this first weekend of April of 2018 as the real estate market just continues its way with buying, selling, renting, investing. It is simply a market that continues to be, we use the term robust a lot. Joe Brett's here in the house as well. How are you doing this week?
Really well. Good to see you, Pete.
Yeah, there's a lot going on, a lot of activity in the market, and I think that's always a good thing.
I'm seeing new listings. That's the best news that I've had. It's every day they're kind of bumping up and new properties are coming on, and yeah. I know we're anxious for that inventory.
Okay, well, today in the show, we're really excited to have two people who've not been with us before. Kenny Taylor is a broker with John L. Scott in Ashland, and nice to see you. You became a broker how long ago? Can you tell us about how you got involved in this thing?
2016.
We're talking to that, baby.
Right
into that.
2016. Talked to a bunch of folks in the industry, did some professional interviews, and that kind of led me to John L. Scott and Jim Remley, who gave me a shot and is a brilliant guy to work for. I'm lucky to be part of that family with you guys. As you know, a lot of great agents who are very generous, and Brian will speak to this too. I feel very blessed to have folks like yourselves who are willing to bring us into the fold, teach us. It's just such a great family.
I like it because I'm around highly motivated people.
That's
why I like it there so much. I really do like that.
And it brings out the best in everybody. And on top of the training and the experience that we get there, there's also, for our clients, there's the advantage of having so many agents that are working together in-house, announcing what's going on. I've done a number of deals, working on something right now where the property didn't even go to the MLS. I just working with another agent at John Scott who is, we're just doing a deal.
It makes it fun, and it makes the ability to go out and actually be successful. And by the way, speaking of success, Kenny, you won one of the rookie awards, I think, from John L. Scott. Didn't you last December?
Everyone thinks I got the rookie award. I didn't get the rookie award.
Didn't get
that?
I
got an award that you were all eligible for. It was the
you got Pete's rookie award. That's
Doug Morse won the award that I won last year. It was actually, I think it's for collaboration. So it's a word for collaborating between offices and working together with people, which I'm very proud of. I was shocked, honestly. I feel very honored, and I was shocked.
Well, congratulations to you. Now, Brian Druihet is here also, right? Get that name right, Druihet.
Druihet, yes.
Now you just became a broker just about a couple months ago, right?
Yeah, I just finished my 10th week.
Your 10th week.
Yeah.
Tell me what your experience has been like. What have you thought about this? I mean, are you enjoying it? I'm always anxious about new people and what you do, what you think of.
Yeah. Well, I came from software.
Okay.
So I actually my most memorable job I ever had was working for a software company owned by Home Depot. So I was exposed to the building industry, real estate to an extent. And then I moved to I actually took an executive position and was there for a year before deciding to jump into real estate. And so I come from more of a technological background. This is very relational.
Very relational.
And I'm
very relationship. Yeah.
Sure. And I've been in sales, so I'm naturally relational. But real estate, if you don't have a love for people, you're not going to do well. And I think that's part of the draw for me to the career. It's very people oriented, and it's the biggest purchase they're ever going to do. Most people, it's the biggest purchase. So there's a lot of emotion. So I think that's what drew me. Is I just saw how important that decision is. So to be able to facilitate that, it really is. It's an honor.
And it's also the best use of the Psychology 101 classes I took years ago in junior college. It's the best professional application I've ever had for that.
Yeah. Well, I think when you around people and the emotion with real estate, whether you buy, sell, rent, whatever you're doing,
it's real.
It's very real. The emotions are there, and because this is, as you said, the biggest purchase people are going to make. And you better do it right? I mean, you got to do it right because the relationship you make is going to last forever, unless you really screw things up. You do not want to do that. No way. So what are you guys seeing in the market as you come along here? I mean, you both are active in it. You're around. Tell us what your impression of the market is right now as we enter April.
So
Go ahead.
Go ahead.
I see a lot of activity. It's not slowed. It's not slowed down at all, as far as I can tell. I mean, I had a big month last month. February and March were huge in terms of activity. Still seeing a lot of buyers that are looking, and obviously, you know, there's a little bit of a low inventory. Well, not a little bit. There's a very low inventory historically. So, still looking for folks that want to list. And if you're a seller, this is an absolutely great time to put your property on the market. There's no question about that.
Yeah.
But I'm still seeing a ton of buyers. The interest rates are still low. I mean, they're kind of bouncing around a little bit here, but they are low enough that buyers are still very interested in trying to get in there. So. It's a little bit of a work hard for your buyers to find them something that works for them that's out there, and then if you got a seller, you know, that's just about getting maximum dollar for their property, which there's a lot of buyers that are looking for almost anything. I've got the numbers here in front of me, and obviously much slower up above 750,000 into the million plus markets, which is, you know, they're always going to be slower. There's fewer buyers there, but in the other markets, we're looking at 1 to 4 months of supply here. That's very, very low.
And that's been pretty consistent for the last few years with the low inventory, high demand area that we're in. So that has not changed in several years. I mean, we still have that area there.
You guys are the pros. We're newer, but you tell me what you think of this. It seems like there's two things that are driving the market. You've got jobs and you've got interest rates. As long as the economy is chugging along and the interest rates stay low, it's like throwing logs on a fire, right? So,
well, in the economy in our two counties right now is probably, don't you think it's the best right now that I've seen it?
Probably the 10 years that we've been in the business.
Back before the Great Recession. I mean, that's how the economy is right now. So it does make for great demand. But the buyers that we're having out there, the problem they have is they can't find anything.
Right.
So how are you guys dealing with that shortage? I mean, you can't make houses contingent on the sale of another property. I mean, all these kind of things where people are trying to do, and sometimes it works, and sometimes it doesn't.
I personally, I'm very similar in that I've got, actually today was my first listing, and I've got like 12 buyers that I'm working with, right? So there's absolutely that dynamic. I think, you know, the buyers I'm working with are actually above the 500,000 mark, and so they're a little more patient. So even though, you know, I think there is a narrative that's happening right now, low inventory, I'm also seeing a lot of overpricing. I'm seeing a lot of sellers.
Now, Brian, that's a good observance on your part, because boy, that is absolutely what is happening. So many people, and we all have, sellers and listings, and what is it sellers right now, they hear us say it's a seller's market, therefore we want to get the top price we can. But many times they go over the top. Yeah. They test the market too much, and then it's going to sit for a while, right?
Yeah, and so that's where, you know, with the folks that I'm listing properties for, so much of our conversation starts and focuses on the price. I think Jim said this on this show, it's a price war and a beauty contest. And, you know, when you're selling property, you have really 2 solid weeks of full attention on your property. And if you misprice that, overprice that, you've just alienated your buyer pool for that 2-week period, and then they're on to the next listings, and then you have to see price reductions. And so I think it is low inventory. I also am seeing, you know, practically some savvy buyers who are actually willing to hold out and wait for some price drops. So I think that we're seeing both dynamics.
It's kind of like a game, isn't it? I mean, you know, if you have a buyer who wants to wait for a price to drop, if someone comes along and buys it out from under you, that's not going to make you happy either. So it's really a balancing act of buying and selling right now out there.
My clients in Grants Pass are pre-qualified for 280. They're looking for a 3.2 in the 1,600 square foot range. We've been looking for 4 months.
Yes.
They're not going to buy these $320,000 homes that are only worth $270. Yeah. So the sellers beware. The buyers are savvy. If they're not under pressure, they'll wait it out. They'll rent a few more months, because when they make that purchase, they want to have their heart and soul into it and need to. And they're not going to go and pay above. And appraisals also get to be a part of the issue too when you get your price too high.
Okay, speaking of appraisals, I had just this last week an appraisal came in low, $5,000. And so what do? You know, the seller and buyer got to somehow come up and resolve this. In most cases, I don't know, you guys think most cases, the seller's going to have to give up that money. because the buyers are not
at their limit.
The buyers are at the limit. They're not going to go over. They're not going to pay over that appraised price in general.
That's
okay,
that's what the appraisal is saying. This is
Yeah.
what this is worth. Now, obviously, it's worth what somebody will pay for it, but at the end of the day, that's what they're saying. So you're asking me to pay more than what the market is saying it's worth.
and people are not going to do that. I don't think. I mean, but I've seen them go over that too.
Let me say one thing. It's a little bit of a right turn. I want to go back to your original question was, what do you do for your buyers? And I think this dovetails into a conversation about newer agents, because I actually think this is one area, and I've seen Brian doing this, is one area where we can bring something to the table. Because obviously, we can get into a bigger discussion about what a realtor's job is and what value we're bringing. But I think with buyers especially, if you're willing to do some legwork, so that means finding those listings that are kind of random, maybe further out there, or there's something wrong with them, but maybe, I just went down to City of Phoenix yesterday with my buyers to check out some, building questions about this lot. That there's some questions of what you can do with it. So it's like, a lot of agents
it's called
say
due diligence.
exactly,
there.
but a lot of agents say, hey, you go down and talk to them.
Right.
Well, maybe I'll go down and talk to them, or I'll bring you with me. Or maybe there's something that is brand new to the market. Maybe people don't know about it. I get you out there first. There's a lot of ways that a newer agent can really bring value, where somebody who's perhaps busier is gonna, flake a little bit on this. We can do some legwork, and especially with buyers, we really kind of like shake the tree and see.
And you're going to put more personal attention to them too. I would think, when you're newer and you're younger and you want to, because you got more time to do it.
And I've heard of agents out knocking on doors of unlisted homes in neighborhoods that their buyers are interested in, and having some success. Of sellers going, well, what do you think they pay for it? But it starts the conversation.
Going back to the 200 agents at our office, send out an email that says, I've got these folks that are looking for this thing. And maybe something that's not on the market yet, or somebody, he's got a pocket, or it's coming on the market. You can potentially find something for someone. And that just is about you going the extra mile to get it out there to the world, what your buyer's looking for.
Like that, going the extra mile. That's a very good point, and that's what you have to do.
In this market.
Successful agent, to be successful, you have to really go beyond. It's just not, call me up, and it doesn't work that way anymore. You shouldn't anyway.
I'm 7 days a week, and I'm working 12, 14 hours a day trying to find places for my buyers. So that is absolutely true.
I just tell my clients, if I'm awake, I'm working.
That's true. It's just
let's get it done.
I'm doing something out there. We got a break coming up here in about a minute, and we're going to go over some of those stats. There's always, as well as the market is doing, and it is. Let's face it, it does well for sellers right now. Buyers, on the other hand, are a little bit. It's not the same for them. But prices are increasing, the values are increasing, and how much can we continue to sustain that here in our valley? Because if we go double-digit increases like we have done in this last segment reporting, that's going to really damper things, because it's going to go too fast, too high, and then all hell's going to break loose at some point.
Buyers need to get in the game though while they can. Before interest rates go up some more, it's still a time to make your move, because rents are going up as well, and that's paying somebody else instead of yourself.
And now's the time. I mean, if you're renting, the rent prices that we hear about are just
so
shocking. It's more than my house payment that people are renting, and they're not even nice places, it seems like, as well. Anyway, we got a break coming up here. The Real Estate Show, we're with Kenny Taylor and Brian Druihet. The Real Estate Show, Pete and Joe. We're coming right back to KCMX after this. And welcome back to the Real Estate Show on KCMX News Media 880. Pete Belcaster and Joe Brett, the real estate guys, with you. We're all real estate brokers with John L. Scott in Southern Oregon here today. And we get together with you once a week here on KCMX to talk about real estate issues and topics, and through all sorts of ups and downs, it seems like. And right now we're simply on a swing that is a positive swing, I think, for a lot of people. It's okay to make money in real estate too, fellas, isn't it? I mean, this is the thing that I think so many people realize. I can't make money, I can't do this, but in fact, if you're smart and you have some help, this is really a wonderful industry in business. You can really create wealth for yourself, I think.
I just talked to a client who has lost a fortune in the stock market, and she has been forced to diversify her portfolio to real estate, and rightfully so. It still is a very good investment. I mean, you look long term, I don't see it slowing down. You mentioned some stats on the price increases. That's definitely a factor. But when you talk about investment potential, particularly, I think Medford, I think Phoenix is a really hot market, investment potential market. Even certain spots in Ashland are still really, really good investments. I think you're right.
Yeah, so I think that's really true. Well, and we'll see what happens as we go along here. But the big concern for me, and I'm always the pessimist of the groups, always, because Joe is always the optimist on everything. Okay, we had a 10.2% increase in value, 1 year in Jackson County to $271,000 is the median price. That says 50% increase from 5 years ago. So you can definitely see the market is changing. It really is changing. What about pending sales? We have been in this gap of we're selling more than we're being replaced with new listings. That's been going on for years? It seems like today. Okay, Jackson County, we still don't have 1,000 homes on the market, fellas. 846. That's 50% higher than a year ago, but still nowhere near what we need.
I mean, it's a little uptick.
I'm
telling all my buyers that too. We're a little uptick.
But even in the last 3-month period, and this is what I want your comments on. Pending sales were up 2%. New listings were down 12%. That's the story of our market. It's a pure simple supply and demand. And until that changes, the prices and the pressure on prices is going to increase. So you've got to do it now.
Yep.
If you're thinking about doing that or selling or buying or changing, what you want to do is only going to get higher prices, right? I mean, in the future. Okay, am I crazy? What do you think, Kenny? Brian, what do you think?
Well, I tell people that ask me that all the time. They're like, "Where's the market going?" If I knew that, I'd be running this place.
We'd be really smart.
Nobody knows. Anybody that tells you they know that is
no, they don't know.
It's a very complex equation. Obviously, we're 10 years into a bull market in terms of the overall economy. So that's something to consider because we're in cyclical markets that tend to be around 10 years. I'm not saying there's a crash coming or a bubble or anything like that. We don't know. Anybody tells you they know is wrong. What we do know, I think the biggest thing I try to tell people is what you guys already pointed out earlier. A rent is as much as a mortgage.
Yes.
So that's one of the biggest factors for you if you're considering buying and you don't own already. You are dumping, in this valley at least, you're dumping a ton of money into rent. And renters know this. This is not news to anybody. In fact, Brian's very clever. He not just clever, he's looking to help people. He started a group on Facebook that is specifically directed towards renters in Ashland because we are in the Ashland office. We hear this all the time.
Every day.
People are like, this is crazy. I'm paying $2,000 a month in rent and, it's all just going down the drain. We haven't talked about this exactly. You're talking about making money, and which is a big part of anybody's job. But also, I think all of us are here to help people too.
Yeah.
And in this market, there's a lot of room to help people because you have people, especially on that kind of lower end, whether they're renters or they don't have the maybe down payment. Right. If you can come up with a down payment and you're already paying that much in rent, you can find a place. Now, maybe is it your dream home? I don't know. How many people get to buy their dream home straight out again?
How else are you going to get to that dream home if you don't start to build some wealth and equity?
So, to answer your question, I don't think anybody knows. I think right now you're dumping $25,000 a year into rent, and you get nothing for it other than you get a headache-free living situation, sort of. Because being a landlord or owning your own home can have its complications too.
Well, I'd rather be a landlord than a landlord, right? Than the renter. I mean, I'd rather own it than rent it.
Right.
But it's the point. We've seen a lot of new construction. Do you boys see? New construction is taking place all over our counties. There's no question about that. I mean, you look at the stats, and there's a lot of it happening. But we're building the same stuff. Everything is the same. We are not building alternative types of housing for people, other than 3 and 2s. It seems like $300,000. That's the kind of the sweet spot. It seems like that is not fulfilling the needs of the people who need the help more than anything, which are seniors who can't move to a place, are people who don't make the median income. There is no place to go, and that to me is our biggest challenge right there.
Yeah, an opportunity. I think, and this is, maybe ignorance is bliss, but I think that if builders focused on particularly 1 to 2 bedroom, small cottages or condos, there is a huge need right now. I can't tell you how many folks I've talked to. They are stuck because the 3-2s are all they
and they don't want them.
And they don't need it.
Well, Sean Maroney from Southern Oregon Tiny Homes has been in here. We have talked about this. The city of Ashland, as you know, passed a cottage housing ordinance that allows you to strip off and sell small parcels of small pieces of housing, not more than
Last
800
Ayala
feet.
is doing some really cutting edge things
And
down there.
we should get
Yeah,
Last to
and
come in here
absolutely.
one of these days
Yeah,
with
because
us.
he's really
He's the only one.
proactive
He's
with
the-
our cities. Yeah.
He's the only one doing it.
Yeah.
And this is the thing: who's going to be the builder? Who's going to be the first builder in Southern Oregon who actually takes some land that they're developing and make it different than every other place? Because right now everything is the same, and even though they sell those, I was in a seminar and people are saying we're going to sell all these new houses that we're making. It's going to take care of the market, but that's not, because the 3 and 2s are not. It's not going to do
more
it.
than that.
It doesn't solve the problem.
So actually, Ashland is doing a development over by North Mountain
Right.
Park,
Right.
And this is, I mean, it's. I think it maybe even would qualify to be called tiny houses. I mean, they're looking at something around $200,000 as a very basic small and look. We all know that's still a ton of money for any, it's a lot of money, especially if it is a tiny house. But you want to live in Ashland, that's kind of where we're at.
The land price.
That's affordable housing in
That's
Ashland.
the land price, that's why that goes up. But still, the demand for those is there.
And nobody wants to hear this, but if you can't afford Ashland or what now Talent in Jacksonville as well, there are other places in the valley to live, and it's a beautiful valley. I mean, I grew up here. I spent 18 years here growing up, and I was born in Grants Pass and raised in Medford. I hear a lot of complaining on the south side of the valley, and I live in Talent, and I love it there. That's where I want to be. But on the other hand, it's like I've lived in a lot of places in my life that weren't exactly the location I want to live because that's what I could afford.
Yeah,
So, I tell people there are places further out or even just in Medford that are more affordable. It's like maybe this is not the time for you to buy in Ashland.
Well, I think some people come here, and I think buyers have misconceptions. I think many people just sit in the Ashland office, for example. People will come in on the door and they're from California or wherever, and you start seeing prices, and they're not from California, and they're going kind of crazy. You may start looking in Ashland and Talent. You may end up in Cave Junction or over in Klamath County, because the value of property is so much different there than here than there. And people are beginning to, I think, sometimes see that
Property
in
taxes,
property
all
tax.
that. Yeah.
Look at the taxes.
Yeah.
Look what you have to pay beyond that. So it's just,
Yeah.
you're right. Location. Sometimes you don't get the one you want.
I would say just be open because there are a lot of really beautiful communities that
Yes.
are not Ashland.
Yeah.
There's other places.
Having done time in Klamath Falls, I can't say I'm going to go back there. But there are a lot of options besides
I
that.
got 100 acres over there. If you want to buy, I'll be happy to sell. You can develop anyway.
Well, and not to plug real estate agents, that's not what I'm trying to do, but this really is where the value comes as agents. There are buyers who have been searching for their dream location, and they've hit dead end after dead end on their own. And I think this is partly why I got into real estate, is because I saw that and saw that there was a huge need for people to they just don't have the time between work and everything else they're doing. So to have an agent that is, what Jim says, shaking the money tree, and is willing to grind, I think it is difficult to get into Ashland, and no doubt. But I also want to just make sure that this is where real estate agents come in, and we can find exactly, not exactly, but we can find what you're looking for.
And Kenny, I'd love to hear you say you took your folks down to the city of Phoenix. That is an intimidating and bewildering process to someone who's never been through it. And just having someone who can ask some questions as the questions come up or be on hand to help them through that process. That is firsthand service. And that's the expertise that really separates you from trying to do it on your own as a really tough task to get it done right.
All right. Well, let's talk about rural properties for just a second. They're down again in this 3-month period. We've seen now, and when we started this thing a few years ago, rural properties in the run up to the cannabis legalization was absolutely out of control. You weren't in this thing yet, Brian, but you were a year and a half ago.
That was a lot.
I remember you saw some. You had some of that
my
stuff.
clients, I didn't like to do rural stuff, so I watched that very closely.
I love rural properties, but rural properties today, the value is not as high. We have fewer sales, which means, and of course, now we've seen on the market a lot of cannabis growers are now on the market selling for the first time.
Well,
which tells me that the whole thing is changing.
It's the same thing you said earlier, simple supply and demand. I mean, a big chunk of that market was it was a business investment. I mean, they had a farmhouse on it, but a lot of that was EFU land, exclusive farm use land with water rights. This is what the cannabis grows were
what they had to
driving
have,
them up.
right?
For their permitting, the state was requiring certain things. So it wasn't, if you wanted a farmhouse on farmland, you're competing with somebody who looks at this
as a business investment.
It's a business investment.
And they're going to make millions on this
stuff.
stuff.
And they may have investors. They may have people from California with money that were backing them. So, what I told my friends who were looking for farmland for for non-cannabis farms, was to wait a couple of years, which is exactly what's happening, saying all of that stuff's getting scooped up.
Yep.
A lot of it's going to lose its value as people fall out of the market, the rules change, people realize the market isn't what they thought it was, and so it's going to get dumped back on the market, and you're going to be there sitting there. Maybe you spend some time saving up your down payment, and you're sitting there ready to grab prime farmland at this kind of price.
But Kenny's right; those are going to come back on the market.
And the unintended consequences: we have a bunch of family-sized farms that would blossom and grow a burgeoning industry. It's just waiting for the farmland to become available again for them to take charge of it and do that with it.
And listen how much has changed, all right, in these two counties in rural properties. Jackson County had an increase of 3% in value from last year to this year, with almost 20 fewer sales. Mm-hmm. Josephine County rural properties lost value in this last year, down 6% overall, compared to a 15% increase in regular housing.
Well, and that second stat was Josephine?
Yes.
Yeah, so
that's shocking.
Well, you notice they also, a legal issue they had, they changed the law about rural residential in how it related to cannabis.
Josephine County is asking the feds for help with their marijuana problem.
Yeah.
Wow, is that something we never thought I'd hear come out of my mouth?
Well, but they need to, because there's too many of them, and people don't want to live next to these roads, and so all that's still out there, and the rural properties are still this unsettled kind of mess.
Interesting sub-market for sure.
It's just amazing. Hey, we're with Kenny Taylor today and Brian Druihet on the John L. Scott Market Watch show on the Real Estate Show today this weekend. We got a break coming up. We kind of come back, and we got another segment to go. Continue our discussion about this crazy real estate market and what it means for you and for everybody else, and this great supply and demand. And people want to live here, let's face it. It's a great place to live. We're coming right back after this. And welcome to the Real Estate Show here on KCMX News Media 880. Pete Belcaster and Joe Brett, the real estate guys, with you here on this first weekend of April. March, April, and May, are generally the three busiest real estate months of the year. And I can't wait. The first March was pretty busy. I can't wait to see what April and May bring us. Anyway, we'll see. We're today with Kenny Taylor and Brian Druihet, John L. Scott agents here today, new agents talking about how they got into the business as well. And as you can hear from them, they're pretty knowledgeable young fellas here, and can actually help you if in real estate transactions. Good for you guys. It's really great to see younger people getting in it. The average real estate broker is a 57-year-old white woman. And we are not any of those. I just want you to know that. I don't, whatever that means. Anyway, welcome back to the show. We talked rural properties. We talked a little bit foreclosures. I have noticed an uptick. I don't know if people have noticed that, but over 10%, almost 11% of the market in this last 3 months were foreclosures and short sales. That's up.
Now, let me ask you a question.
Right.
Does that scare you at all? Does that make you worry about the market at all? Because obviously that was an indicator.
No, what I think has happened is that we've seen so many homes that what's coming back now on the foreclosure market are bank-owned properties at the bank zone, not federals, not the feds.
The shadow inventory that we knew was out there for years.
They're bringing it back.
Once the banks got bailed out, it was like, well, we've got these assets. Let me wait for the market to rebound before we put them back out.
Yeah. But there's a lot of it. 11%. That's really quite a bit. That's 1 out of 10.
So you think a lot of these foreclosures are stuff that have been left over from 7 years ago?
Many of them have been vacant. They're just now getting them back into the market.
Because the foreclosure activity is pretty minimal otherwise.
But they're getting a higher price for them than they would have 2 or 3, 4 years ago. Yeah. That's the difference. But they're out there. Yeah. And as agents and buyers, we should not forget them.
No.
Because sometimes you can pick up, if you watch it, if you have a good agent and you're looking, that may be the way to go too. Never forget them.
You make money on the buy. I mean, you make money on the buy, so I think it's definitely viable.
Yeah. Have you guys sold any? You guys really haven't dealt much with foreclosures or any of that, have you? There's not much out there, really.
I would do it if I had a client that found something they like, and I've made a couple offers on things. I I found what happens with foreclosures is that there are a number of buyers that are all trying to lowball this thing and see how low the bank will go.
Right.
So I've had a couple situations where I put offers in for my buyers, but the bank didn't want to go as low as we want to go.
And in these foreclosures, remember, you're going to have to go online for them and apply for them. These aren't like dealing with agents, other agents. You got to use the great systems that these banks set up. And believe me, they're set up for the banks. Everything is in their favor, and you can't negotiate with them on these properties, nothing. You do what they say or you're out.
We just were the winning bid on Realty Bid. 4th time we bid on this property in Medford on Douglas Street for an investor. And he's willing to go about 145, 150. The reserve is set at 191. 4 times they put it out there. They've not got past 140. Nobody's taken the bite for more than 140. But it's interesting to watch that process. They put it back out there.
But some asset manager in Washington, D.C. is looking nothing. They look at only the Zillow figures and things, and they're pricing those foreclosures based upon that kind of information.
It's got a cost for them to put it out there and to hold on to it.
Well, I want to point something out here that you are doing your job, right? I mean, like this is you earning your commission because that's if that ends up being $140,000, $150,000 sale, you've gone to bat for this guy 4 times. Like this is you going above and beyond.
And he does normal sales. He goes out and finds other properties. But boy, if you can pick one off on one of these internet sites, it's a viable option for investors. It really is.
I'm wondering about multifamily units. We're seeing more of those, and the rules. Joe goes to all the planning commission meetings and stuff like that. So we get first we get up to first information on things coming, developments coming and stuff. But we're seeing more of that. Isn't that the rules are really loosening for people to take your property and invest in it, and you can expand it and do additional dwelling units or tiny homes on it. Thank goodness that's happening. We need more of it. You guys just comments on that. I don't know.
It's true, and I'm trying to actually right now nail down a deal on one. But same thing I'm seeing with other homes. The multifamilies are overpriced. I feel
Are overpriced.
and my buyer feels so. You got to understand that most of the investors that are going for multifamily, like I said, the narrative is seller's market, but functionally, practically, buyers will hold out.
Yeah. It's got a pencil.
Yeah.
Well, average days in the market is down. That's a good sign. I mean, there's certainly robust activity out there across all prices.
If you list it, we will sell it.
Well, if you list it at a decent price, it'll sell faster. I think that's probably the biggest thing. That'd be realistic and more there. So anyway, well, I don't know where this is all going to go. We certainly, as we go into the rest of this month.
That's why we have to do a show every week.
Yeah, because it changes weekly. I mean, it just amazes me how much activity is out there. The demand is not slowing down. That to me is the key. That people say we're going too fast, too much. The demand is there, right? You guys see that? You guys talking about lots of buyers. I mean, I think that's the thing.
So like I said earlier, I grew up in the Rogue Valley. I spent 20 years here, and then I went to California for 20 years and came back. I've been back about 5 years now, and so I have a perspective of somebody who was outside the area and came back and now understand. I lived in Southern California. I lived in the Bay Area, which a lot of our buyers are outside buyers are coming from there.
Yes.
And I will tell you, we are one of the last places. It may seem like our prices are high here, but we are one of the last places on the West Coast that has a vibrant culture, has good weather, has a nice, we're not near a metropolitan area, and in some ways that's what keeps this area from growing faster, because we don't really have the job base that some of these places have. But I will say that, absolutely somebody from Southern California or the Bay Area, or now we're seeing a lot from Seattle, they're, an average house there is close to $1 million. So you're looking here and you're saying, oh, I could get a little property. The schools are nice.
Are these all retayees coming, or are there families? Is it everybody mixed?
I have got a lot of people coming who are now telecommuting or even flying back once a week, these direct flights out of the Medford Airport, flying back to do their job.
I've met people, Kenny Bryan, who moving here for that purpose with kids because they don't want to raise their kids in California anymore, and they'll telecommute, they can work out of their house. And that seems to be a big thing.
I think more would be coming if we had the inventory to accommodate them. That's putting a little pinch on.
Yeah, and where are we going to put them? Where's everybody going to go? What are we going to build?
And rents are going to go up when they all get here.
As you see, we have not solved the problems of real estate here in the Valley, but it's a robust market, obviously, and I think the rest of this year is going to continue. I mean, what do you guys think? I mean, I think 2018 will beat 2017 in the end. What do you guys?
I think there is one key stat, and I told the seller this yesterday. the buyer pool is huge right now. Demand is huge right now.
Yep.
We just have to keep in mind interest rates are rising.
Yep.
So a year from now, I'm not saying demand is going to go down, but buying power will be affected.
Well, buying power will be affected.
Well, let me say this, and
Yep.
people don't talk about this, and I want to make this point. I make this point to buyers and sellers all the time. Initially, as rates go up, it actually will raise prices and raise activity because people will get off the fence and say, like, okay, now's my last chance.
Yeah.
So, yes, in the long run, Brian's saying is true. A year from now, 2 years from now, if rates have gone up consistently, of course that will damp things. I mean, that will put a dampen on things. But in the short term, it's not going to slow things down. Like in terms of 2018, it doesn't really matter what happens. 2018 is going to be a big year. But I will say this: if you're thinking of selling, it's a great time to
Now is
do
that
it.
time. I agree with you there because
Yeah.
I think you're only going to get less for it in the future. But we'll see. Anyway, well, that's going to do it, boys. We're out of time. Kenny, nice to visit with you, and Brian, to visit with you as well. Good luck to you both.
Thank you very much.
It's great to have you part of John L. Scott, and it's great to be around young people who are motivated and doing well. And so good luck to you guys.
Thank you,
we
guys.
wish you luck. Come back and visit. We'll do this again, okay?
And
You
you
come back and
can
talk
thank you
more.
guys for making you guys the young guys in the
Yeah.
doing what we do.
We really appreciate that. That'll do it for the real estate show today. Here in the first week of April. For Pete and Joe, thanks for joining us. God bless you all. We'll talk to you next Saturday right back here on KCMX for the Real Estate Show.